A rally on Wall Street in early January was driven by the stunning performance of high-tech giants. On Monday, the benchmark stock indexes regained most of the losses incurred in the first week of 2024. The Nasdaq jumped by more than 2%. At the same time, a sharp fall in Boeing shares moderated the rally of the Dow Jones. On Monday, the S&P 500 climbed by 1.41% to close at 4,763 points. The Nasdaq in the S&P 500 looked at the first intraday gains of more than 1% since December 21 and showed the biggest intraday growth since November 14. The major stock indexes traded in the red in the New York pre-market, having lost 0.4 and 0.6% of yesterday's gains. The S&P 500 is expected to trade in the intraday corridor between 4,710 and 4,778 points. Going beyond these borders, the index will either decline to 4,680 or recover to 4,782. On Monday, investors are again expressing their risk-on mood. Atlanta President Raphael Bostic said that the central bank is poised to maintain hawkish monetary policy because inflation still exceeds the target annual rate of 2%. Besides, the policymaker reiterated his viewpoint set earlier. He expects the first rate cut later this year by 2/4 of a percentage point, and this will happen somewhere in the third quarter. Michelle Bowman softened her previous hawkish stance and dropped a hint that she is ready to back rate cuts as long as inflation is slowing down. Both the US dollar and Treasury's yields went down in this context. In turn, the high-tech sector gained ground. High-tech giants developed a rapid rally. Amazon shares closed yesterday 2.66% up. Alphabet shares rose by 2.29%. Nvidia shares surged by 6.3%. Chipmaker Advanced Micro Devices leapt by 5.48%. Apple shares rallied by 2.42% after the iPhone maker said its Vision Pro mixed reality device will be rolled out on February 2 in the United States. Meanwhile, Boeing shares plunged by 8.03%, widening on the Dow Jones. And the S&P 500 Energy Index was the only one of the 11 sectors to lose weight, falling by 1.16% as crude oil prices collapsed by about 4%. Today, futures for the US stock indexes pulled back before the opening bell after a sharp rise. On the back of rising Treasury yields, high-tech heavyweights also lost ground. Apple, Tesla, Meta, Microsoft and others lost 0.3 and 0.7% in the pre-market. Nvidia maintained its uptrend. Trade balance deficit in the United States decreased to $63.2 billion in November from $64.5 billion in October, below the estimated $65 billion deficit. Exports fell by 1.9%, whereas imports also dropped by 1.9%. The economic data released today is of a secondary importance to market sentiment. Investors are anticipating the reports of a major importance. Consumer inflation data will be available on Thursday, and factory inflation data will be released on a Friday. Investors will be alert to producer price index in light of the recent fall in crude oil prices. A Fed policymaker's fresh view of the future may have an impact on market sentiment. Today, traders will have to figure out the speech of a Fed Deputy Chairman for Supervision, Michael Barr. In the corporate world, Netflix shares fell by 2.2% after brokerage firm Citigroup downgraded the streaming platform to neutral from buy. In the currency market, the US dollar index rebounded following a steep drop on a Monday. Its major rivals retraced downward. So the US dollar index opened the new year opened New York trade at 102.3 or 0.17% up. The baseline scenario for today is a trading in the CAD between 102.00 and 102.50. In case the index goes beyond the borders, the seller's target will be 101.80 and the buyer's target is seen at 102.70. Despite fluctuations, the US dollar index has firmly settled above 102 points this year. No doubt remarks by Fed policymakers push the instrument down and confuse market participants with mixed signals. So, traders give priority to macroeconomic data, hence popular currency pairs will hardly make sharp moves before the CPI and the PPI reports. Today, market participants see a 57% chance that the Fed could cut interest rates by at least 25 basis points in a March. According to CME Group's Fed Watch tool, up from nearly 64% on a Monday. Meanwhile, the Canadian dollar is being squeezed by the US dollar. The USD CAD pair traded higher in the pre-market at 1.3373, 0.2% up. The instrument is likely to trade in the intraday CAD between 1.3335 and 1.3420. Despite the high volatility, the instrument is actually hovering near the high of 1.3360, either rising or falling by several tenths of points. Oil prices, which put pressure on the loonie yesterday, have rebounded by more than 2% today, but the upside from the growth of oil prices was negated by the recovery of the US dollar. As for the economic calendar, Canada's trade surplus remained in November, but narrowed. Canada recorded a trade surplus of 1.6 billion Canadian dollars in November, down from a $3.2 billion surplus in the previous months and below market expectations of 2 billion Canadian dollars. The narrower surplus was driven by 1.9% increase in imports, while exports shrank by 0.6%. In the cryptocurrency market, the US Securities and Exchange Commission is keeping traders on edge as it decided whether to give its blessing to Bitcoin ETF. Market nervousness on a Monday brought Bitcoin above 47,000, and today the token was trading quietly in the CAD between 46.5 and 46,800 dollars. However, derivatives, some traders are already picking up steam, betting that the Commission will greenlight several ETF contenders. The amount invested in Bitcoin futures has risen steadily since October and jumped to $19.2 billion in early December, the highest level in 2 years, according to CoinGlass. Additionally, the CoinGlass Fear and Greed Index is at a 2-month high and remains in a greed territory over the past 30 days. As for trading prospects, the baseline scenario suggests a movement between $46,300 and $46,900. Going beyond these borders could lead to the crypto either down to $45,100 and $44,300 or up to $47,100 and $48,200. You have watched the forecast for the New York session. Feel free to ask any questions. Our analysts are always open for your feedback. Subscribe to InstaForex TV channel to keep close tabs on the financial markets with us. See you online tomorrow.